Good morning and welcome to BDO's not-for-profit webinar, which is getting ready for 31 December 2022 reporting. Thank you for joining us at this morning's webinar. Firstly, I would just like to do an acknowledgement to country. We would like to begin by acknowledging the traditional owners of the land on which we meet today and pay our respects to elders past, present and emerging. We extend that respect to Aboriginal and Torres Strait Islanders peoples here today. So I am Elizabeth Blunt and I work in BDO in Melbourne and I'm a partner in the Melbourne Audit and Assurance team. I lead the not-for-profit sector in Melbourne and I'm joined today here with Aletta Boshoff, which I'm sure many people on this webinar know through all of the monthly webinars she kindly prepares and delivers to all of our clients. Aletta is the national leader of IFRS and corporate reporting, as well as ESG and sustainability, and she will be talking today about BDO's sustainability report, which we recently published and put on our website, as well as talking about how to get ready for your 31 December 2022 financial reporting period. We've also got Fahim Khondaker, who is a partner in BDO in Brisbane and in our consulting division, and he will be talking about how data analytics can be used in the not-for-profit sector. And lastly, we've got Stefanie Merlino, who is a partner at BDO in Melbourne in our people advisory team, and she'll be discussing the considerations in the not-for-profit space regarding employee and contractor engagement and doing a high-level overview of FBT and pay compliance. So I'll hand it over to Aletta now to talk about our sustainability report.
Good morning, everybody. So the sustainability report, we've been talking about this report for a long time, and in our previous not-for-profit webinar, we talked about the importance of sustainability for not-for-profit entities. Now, at BDO, we felt it's really important that we want to do the right thing. We don't want to talk about sustainability and ESG and ourselves do nothing. Therefore, we've embarked on a journey to prepare our inaugural sustainability report, which was published on the 31st of October this year. Now, we're incredibly proud of this report. We think it's a nice, shall I say concise, although it's 78 pages, concise story of who we are and what we do and why sustainability is important to us. So, you know, at BDO, we do believe that it is about preserving the planet for future generations. It's also, in my, I would say, layman's English, I would say it's about, it's that we're not focusing on making money at the expense of people and at the expense of the planet. And then there's a balance. So we want to make sure the planet is preserved for future generations. We want to make sure we look after our people here today, but also future generations. And therefore, for us, a real passion. If you look at our sustainability report, you'll see we followed the World Economic Framework, World Economic Forum's framework. And in that framework, there are 4 pillars, and it's pillars around people, planet, prosperity, and principles of governance. And we've ordered it and said we want to look at the people side first, because at BDO, our why is people helping people achieve their dreams. So it's all about people, our people and our clients. And therefore, we've started with people and worked through planet, prosperity, and governance. This is a very nice, on one page, snapshot of sustainability at BDO. I want to point out that this is not highlights, because some of the things on there are not necessarily things we're proud of. For example, of our board, we've only had 1 out of 8 of the board members were female, and we're not proud of that. 12.5%, it's there. because, you know, it's one of the key things to report. So it's not just the good news here. There can be some other, let's say, bad news as well. However, I am very proud to say that at 30 June, although we only had one female board member, earlier this week, the BDO partners have voted and we now have another female board member. So we've gone from 12.5% to 25% female board members. But if you look at the people, we provide our net promoter score, which is 62.4. We provide our people engagement score, 77%. We provide the training we provide to our staff, the training hours. So all the things that we believe make a BDO a great place to work. On the planet side, we also provide our commitment to be net zero by 2050 or earlier, and that is aligned with BDO Global's commitment. We are currently busy with our carbon footprint calculation, and we'll have the final number for our baseline before the end of the year. We've also disclosed that as part of our moving to new premises, we'll be planting trees for every square meter of these new premises, and we'll be planting 20,000 trees within the next few years as part of relocation to new buildings. We're also proud of the fact that we've reduced the use of paper by 67%, by double-sided printing, 4 on a page, etc. Prosperity, it's all about, you know, it's the revenue we've made, but it's also the tax that we've paid on that revenue. We disclose the number of people we employ. 2,141 people worked at BDO at 30 June this year. We've got 12 offices in Australia, a lot of new partners and directors. And then also on the right-hand side at the bottom, we are very proud of our pro bono hours and also the work where people volunteer, often with not-for-profit entities. Lastly, if we look at principles of governance, we all know cybersecurity very important. So we've had mandatory cybersecurity training for our partners and staff. And also there's a link to our 2022 transparency report where we highlight the work being done by our audit service line and the quality of the work being done by our audit partners and staff. And it's important, the work they do, because it gives investors confidence in the capital markets. So an overview of our sustainability report. If we break it down a bit more, when we look at people, it's our people and our clients. And we've told the stories, and I know we've told a story, and we had a quote there from Fahim as well. Our people stories, we talk about people engagement. We talk about diversity, equity, inclusion, which is not just gender diversity. And we provide the stats around how many different languages are spoken at BDO, and how many different backgrounds, cultural backgrounds, and we provide stats on how many of us, including me and Fahim, have been born overseas, not in Australia, but now proudly Australian. So all of those stats are there. We also talk about human rights, especially around modern slavery. We talk about flexible working and the important role that plays at BDO. We talk about health and well-being, and there's very interesting statistics around the number of mental health officers we have at BDO. So there was a whole push to not only have occupational health and safety, but also have mental health officers. We've got skills for the future, that's around all our training. And then our clients, we talk about client engagement, we include client stories, and also education, similar to what we do today. All the webinars, thought leadership that's been put out to educate clients and to work with clients. We also include a section on the planet. So we've got climate change, our carbon footprint calculation. How do we calculate scope 1, 2, and 3 at BDO? Our commitment together with all the other BDO firms globally to be net zero. by 2050 or earlier if we can. We talk about our facilities and how our facilities are, the facilities have been, their energy rating, for example, has improved. And as we look for new facilities, we focus on sustainable facilities. We've provided stats around our electricity usage and also around waste and impact management. So what do we do with old laptops, old mobile phones, etc.? Under prosperity, we talk about employment and wealth generation for our people, but we also talk about community engagement. We talk about innovation, which is so critical in our business, and we talk about BDO Connect, which is the old PPN on how we connect with smaller firms and also help them to provide services to their clients. And then principles of governance, the governance structure of BDO. We provide an overview of the membership of the board. We've got a skills matrix for our board, which is very important for all boards, board diversity and independence. We've got business ethics, legal and regulatory compliance, as well as risk management. Just a very interesting fact, when we reached out to our partners, our staff, our clients, and we asked, what are the things within ESG and sustainability that you would like BDO to be good at and to communicate about? What's the number one thing? And the number one thing came back from partners, from staff, from clients, all of them, business ethics. And that's a critical thing for BDO, and we are incredibly proud of the governance systems that we have in place. And we've got extensive disclosures here about governance at BDO. So if you want to read our report and read our story, you can download the report on our website. It's 78 pages. It's been a labor of love over the last 8 months for Ashley Bleeker and I, a big job, but we'd love to share that with you. And I think that will also give you a bit of an idea of what we've been talking about in our ESG webinars on what to do, where to start, because exactly that roadmap that Ashley and I have explained on our ESG webinars is the roadmap we've applied for BDO, and here you can see the final outcome. So Elizabeth, we're really proud of this and we hope people can look at it. If we look at for today, maybe the not-for-profit webinars, Elizabeth and I thought it might be a good idea to give you an overview of what is available. So if you look at the not-for-profit specific webinars, there's a link to the webinar so you can register for next year's webinars. They're already there, ready for registration. But there are also links to the webinars that have been presented over the last year or two. So there's financial reporting webinars. You can download the slides and watch them. But there's also some other webinars around fringe benefit tax, superannuation guarantee, portable long service leave, which we'll touch on today, GST compliance and income tax, payroll compliance and wage theft. So all of these are very specific not-for-profit webinars that you can register for or watch the recordings. As you know, we have these monthly IFRS and corporate reporting webinars. We do 12 during the year. I think this year has been the 6th year that we've been doing it. And there's just, recently last week, we did accounting standards update, getting ready for 31 December reporting, which you would say, is that not the same as the webinar we're doing today? And I would say no. These monthly webinars, and particularly that November one, is looking at all the accounting standards that impact for-profit and not-for-profit entities. So it would be really important to watch those webinars every month. And we look at the changes in depth. Today, in this not-for-profit webinar, we look at not-for-profit specific issues in addition to this webinar series on the screen. So we're not talking about the distinction between current and non-current liabilities and the recent changes. We've done that. Now we only talk about not-for-profit stuff. And then another reminder to also register for the sustainability and ESG webinars that Ashley and I present. Tomorrow is the last one for this year. We're talking about ESG due diligence, and you can still register for that. But I've got a link there to next year's monthly webinars around sustainability. And we're starting January just after Australia Day, and we're looking at the United Nations Sustainability Development Goals, and we look at the World Economic Forum, International Business Council with IBC, which we've used at BDO to do our sustainability report, and we'll unpack that and how that could be applied to other entities as well. So that's just the first one in a series. So just a bit of an overview of everything that's available. There's not-for-profit specific webinars. There's IFRS webinars every month. There's sustainability webinars every month. Elizabeth, I'll hand back to you to talk about today's agenda.
Thank you, Aletta. And I guess just also in addition to the monthly webinars that we have, you also have articles that are published on a monthly basis that have really relevant topics for not-for-profits as well as for-profits. So I think it is important to check the website regularly or register to receive those articles on a monthly basis. Thanks for sharing the sustainability report, Aletta. It's really good to see a report that I think a lot of organisations can relate to, in addition to seeing those monthly webinars that you produce. I know you've talked about it a bit internally at BDO, and it's taken a lot of effort to get the data and the information to put it together. So it's not something that can be whipped up quickly. A lot of effort is taken in recording the information to put it into a sustainability report. So if you haven't yet looked at any of the information, on our website, there is lots of information on there already, but also feel free to reach out to any of us to find out more. So in relation to today's agenda, we've split it up into 3 sections. So firstly, part A, Fahim will be discussing data analytics and how data analytics can be used by not-for-profits to inform the decisions we make in organisations, and also talking to a tool that we have created internally at BDO in relation to data analytics. Aletta will then continue on to provide the accounting standards update, and as she said, this is in addition to the monthly webinars that are prepared and are published. This is only not-for-profit specific, so there is a lot more information which impacts all organisations and not just not-for-profits. And then part C, Stefanie will be discussing contractors, FBT and wage compliance. Now, we would like to make this as interactive as possible. So if you have any questions, please put them in the chat box and we will take questions throughout the webinar. Yeah, so put them in the chat box if you have them, and we can answer them at the end of each session. So Fahim, hand it to you now. Thank you.
Thanks, Elizabeth. Hi, everyone. So Fahim Khondaker, I lead our data analytics and insights offering here in BDO. I've also recently joined University of New South Wales as a professor of practice there to basically talk about data analytics in the business context as well. So hopefully I'll be able to share some of that information with you today as well. There are 2 or 3 things I want to talk about today. Firstly, I want to showcase an example of a client that we've been working with, a client of ours called PCYC Queensland. They're an organisation focused on helping young people. And then I'll move on to as Elizabeth alluded to, a tool that BDO has been working on in analysing the not-for-profit sector specifically. So I'm really excited to show you what we've done in that space and how everyone can benefit from, all our clients and all our people can benefit from that analysis as well. And finally, I just want to wrap up with a bit of a framework or an approach if you are thinking about using analytics in your organization, or if you've already started, how to optimize that a little bit better and make the most of it. And if you're starting completely from fresh, this would be a great introduction as well, hopefully. And in terms of not-for-profit experience, we do a lot of work with the not-for-profit sector as a firm, and I have myself as well. And I've sat on the board of a relatively smallish to large or medium to large size not-for-profit organisation called Multicultural Australia. So we settle refugees in Queensland. I was on the board of that for about 6 years. So I do have a fairly decent appreciation for some of the challenges that not-for-profit organisations face on a day-to-day basis. So hopefully we'll be able to weave some of that in here as well. So with that, I'll kick off the presentation around PCYC Queensland and the journey we've been with them. So we've been doing a lot of work in the strategic planning side of things, but moving into, once we've bedded down the strategy, okay, what's the data and the reports and the decisions we need to make about our strategy. So we've got an aspirational goal to become the expert organisation in youth development, obviously in partnership with others as well, not just ourselves, but that's the aspiration. And we're going to focus on 4 key pillars, being community leadership, helping young people achieve employment and entrepreneurship ideas. Most importantly, because we do a lot of work in the the disability, so the disadvantaged community sector with PCYC, or PCYC focuses a lot in that. So the inclusion, belonging, and self-worth of an individual young person would be is a really important focus for us, for PCYC as well, and also the health and well-being of those young people. And we do all of that through education, development, and training. So that's the overarching strategic framework that we've developed with PCYC over the last 6 years, and this is their main focus areas going forward. Aletta talked about the United Nations Sustainable Development Goals. Sorry, if you could just go back one slide. What these things were built on, or we had regard to the UN Convention for the Rights of a Child as well, in coming up with these strategic pillars. So what we landed on was, okay, so that's all great. We want to focus on this, and that's what we do as an organization. What is the data we need to make better informed decisions about each area? So decisions like, have we got enough resourcing? Is the thing, is that particular program popular? That kind of thing. So how do we tell the story of what we are doing as an organization using data analytics? And what we landed on was 3 broad categories that you can see on your screen. The first one on the top left is understanding our operational activities, so what the organization does, when we do it, who does it, where is it being done, and how well is it being done? Like those sorts of questions. So being able to say that we've run 50 programs in that location and that location, the 50 in location A are performing better than the 50 in location B. Being able to see that regularly and making informed decisions about improvements and appointing the right staff and allocating resourcing appropriately, we found that for PCYC Queensland, that was a really important objective. And then to the right, on the top right, we've got understanding the customers, and obviously in the not-for-profit sector, customers can be a tricky word, but essentially the people you serve, who consume your services, and our people, so our staff as well, understanding insights, getting insights about them. So understanding things like who they are, which services they use, how often they use the services, and even how they found us. Those sorts of information is really useful to make better decisions again. And then the final one, which is that red bar at the bottom, understanding our financial performance. Obviously, financial sustainability and being able to stay afloat is the ultimate challenge for many not-for-profits who run very tight budgets, because we reinvest most of the surpluses back into the organization, and funding has been dwindling in many sectors, many subsectors within the not-for-profit sector. So in that environment, it's very important for us to fully appreciate and understand our cost drivers. So the activities and the people and the resources that drive our costs, and making sure we know exactly how our costs are going up or down and what is driving those costs, so that we can make decisions to change some of those drivers. And then the revenue side of the things as well. So just understanding sources of revenue, and those of us who get paid either through, if we get block funding, that's one thing, but if we don't get block funding, that understanding of, okay, so we have to provide services and the price we charge those services for and the quantities we sell, that sort of thing is really important for us to understand. And I'll give you some examples of some exact dashboards and analysis that we've done with PCYC to get these three categories in our heads a little bit better. Still a long journey. We're in the very early stages with this particular organization, but we have made, it's been really insightful to just be able to tell our story in these three domains using some data that already existed. We also look at external data to compare an organization against others. And on this front, there's obviously a ton of data from the ABS. So examples being like understanding the community in which you operate in. So the ABS has data, population graphic, demographic data on a particular state, a location, a town, a very small bunch of suburbs, essentially almost. You can go through statistical areas and find demographic information about the market that you're operating in. So if you're helping young people, it's really useful to know, okay, so we've helped 200 young people. How many young people were in that area that fit the demographic that we were targeting? So we got that sense very quickly, and we can monitor growth and set some realistic targets for ourselves. And then the other thing, as I mentioned earlier, that we've done is we've built an NFP sector analysis tool, which gives us an ability to analyze financial statements at our fingertips across multiple organizations. I'll talk to that in a little while. So with that, I'll give you some examples of some of the types of dashboards that we've built. So here's one, for example. So PCYC runs programs through clubs and through facilities across the state of Queensland. So across the top right, very top right, you can see things like we've helped 69,000 young people between the month of January and June in the data set that we have. Now, these are all dummy data. I've changed all the numbers for today's presentation, so they're meaningless in that context. We've delivered 18 programs, and we've delivered 4,583 sessions across 76 clubs. And then we've created some graphs to understand that a little bit better. So for example, the first one was just which programs are the most popular in terms of attendance. The next one was which clubs are the most popular, so which locations are doing really, really well. And then you can see we've used some colors. Now you've got to get the balance right between how much colors to use and not use, because sometimes it can become overwhelming. In that second column of count of sessions, the colors kind of give you a bit of a snapshot of how many different types of programs are being run in a particular center. So I'll use Toowoomba as the perfect example at the top. 461 sessions run in Toowoomba, so it's a really popular place in terms of how many sessions we're running. And you can see that there's multiple colors in the Toowoomba bar, which suggests that they're running multiple different types of programs. I'll pull across right to the far right, which is the number of participants by program. So it's all good to run 461 sessions, but I'd like to see how many people are attending the programs as well. And we can see which programs are the most popular based on the number of people attending them. Now, you can obviously add multiple dimensions to this in terms of time and analyze this over time and compare one program versus the other and things like that. So the idea was for us to be able to just at a very high level confidently say we've helped this many children over that many periods and across these many programs in these locations. And that's really useful for stakeholder engagement, especially with funders and government agencies and stuff, to be able to say, here's what we're doing, here's the value for money for funding us and things like that. PCYC Queensland does not really get government funding, so it's a bit of an anomaly in that sense. But we're finding that still talking to stakeholders this is a really useful tool in that context. I won't go into too much more detail, but if you go to the next slide, we dive in a little bit more. What analytics allows us to do is we get to analyze the same thing from multiple perspectives. So here we've got some analysis on like by month, by day of the week on the bottom left. This was quite insightful for us. What became a very obvious thing for us is we don't run much on day 6 and 7, which is Saturday and Sunday of the week. And as a youth development organization, we should be running programs on weekends because we want kids in school on weekdays. So we've got programs in school, obviously, but we're going to run our own programs on day 6 and 7 as well. So that became a bit of an insight for us. And then on the bottom right, we've got some times when programs start. So we see that most programs don't start till about 10 a.m. and they finish at around 1 p.m. Now, again, we can drill down and see this over time and things like that. And it's been very useful to drive some particular location-specific decisions on a particular day and things like that. Go to the next slide, please. This was about program growth rates. We want to monitor programs that aren't popular just to see attendance rates. So compare how many kids started when we started the program, how many kids are running it on average recently. And if that's not growing, we might decide not to spend the resources there and allocate it onto more popular programs. If the objective is youth development, we can start aligning results to objectives very quickly using analytics. Next one over was demographic information about our attendees. So we collect some demographic information, so understanding the various breakdowns and things like that. Now, all this is useful in combination with making a particular decision. And I would advise you not to just build reports for the sake of reports. Every single report you see here was first thought of as to why we need it and why we need that particular insight, what decision we're going to make from using that insight, and how we're going to go forward. So a really good example on this graph here is we've got some age breakdowns. We've got some target markets and target age groups that we try support. And if that spread wasn't hitting the target age group, we would then start talking to our marketing team about, okay, how are we going to attract more children or more young people from the particular age groups we're particularly aiming for. One really good example of that is we've got a driving license program. Obviously, we don't want anyone who's not eligible for a driving license in that program. So this was able to show us that, making sure that that sort of obvious things isn't happening as an extreme example. Okay, so that's the client case study of using analytics for them, and they're basically using it to understand what they do better, to be able to tell their story better. They're using it to understand their people and the customers that they serve, and then they're using it to overlay that with financial performance. So it's not just a stock standard, here's our profit and loss statement, this is how much money we've got, and we're not making money, or we are in we've got financial risks and things like that. So this is a little bit more insights to make decisions that you as managers probably already make day to day. This is just the evidence base to support that. I alluded earlier to the BDO NFP sector analysis tool. If we go to the next slide, I'll just talk to that in a little while. I'll start with why we even bothered making a sector analysis tool. And the main reason was that we've got a lot of staff across, we've got about, I think from memory, about 2,000 people across Australia. A lot of us work in the not-for-profit sector, so we just thought it'd be really good to invest in ourselves to learn more about the not-for-profit sector and build our expertise in that, so that when we talk to you as clients, we actually talk in a more informed way. It's also a really good way to highlight some data quality improvements for the sector and give back to the sector to help the sector advocate for itself and participate as a true, genuine advisor and partner to this sector. We're very committed to this sector, and it's a sector that we really enjoy working with. It aligns very much with our values. Something that wasn't probably mentioned in our sustainability report earlier is just how much volunteer time individuals from BDO put into the sector as well. And we've got so many partners on boards and advisory committees and things like that on top of the pro bono hours that you've seen in there as well, which is really great. So what is the sector analysis tool? And what it is we've looked at the ACNC annual information statement data, which all of you lodge as not-for-profit entities each year about your financial performance and some additional information. So we've taken 7 years worth of that, the last 7 years worth, and we've kind of pulled that all into a tool, so you can now compare any organization against any other or any sector over a 7-year period to understand trends and things like that. So we obviously want to understand revenue and cost categories. So where is government funding increasing in a particular subsector over time, or is it decreasing? Is a particular type employee expenses, are they going up or down across each sector? And then the ability to also pick one entity and compare it against 5 comparable entities that you may know of and see how you're performing against them and things like that has been really useful for us. It's only just one source of information, one tool. It's not the be all and end all of everything, but it's really been insightful, and we found that it's added to the conversations we've been able to have with our clients. So I'll give you an example of what that looks like as well. You'll have copies of these slides as well. So what you can see on the left hand side in the graphs, that's 7 years worth of data from 2014 to 2020. And above the line is revenue, below the line is expenses, and each color represents a particular type of category. So that orangish color, that's the big chunk of the revenue, is donations and bequests. And then the bluish revenue line is government grants in whatever selection, whatever entity I've picked in this example. Now that's really useful from an entity level, but it's also more useful as a subsector level. So if you were to look at charities and not-for-profits that do work in the mental health space, if you click on mental health, you can see how much government funding has been, how government funding has been trending in that space or not, and compare it to other sectors as well. We've got the sector average at the bottom. So yeah, so there you go. So there's an entity that I've selected on the top, which gets the bulk of its funding from donations and bequests, whereas in the sector average, which is the graph below, you can see government funding, government grants makes up the bulk of the funding for that subsector. So for this entity, they might want to look at their government grants and whether they think they're getting an appropriate share, or they may have purposely chosen over time not to rely on government funding and go accordingly. Similarly, we can see that their employee expenses in recent years are comparable, or we can compare them, they're a bit lower than the sector's average. So again, really informative. We obviously have to use this sort of thing with caution, because some people classify certain things as other expenses when others might include employee expenses in that category and things like that. So you do have to use it with a degree of caution. But again, it's one of many sources of information to use, and it's been really useful for us. If you go to the next slide quickly, there's some employee information in terms of types of staffing. So I think everyone reports full-time staff, part-time staff, and casual staff. So we can see our entity's mix of casual, full-time, and part-time versus the sector. And we can compare that, or we can compare it to another entity and see what that looks like. And again, another source of information to help a management decision somewhere around people and the type of structuring we may have. I know my colleague will be talking a little bit more about that shortly as well. And then the final one was just comparing one entity to the other over time. So this is an example of employee expenses as a percentage of total over time for two entities. I've just picked two random charities, and you can see that one was higher over time, but they've kind of merged towards the same sort of number and proportion in 2020. So again, we can compare multiple different ratios and things like that as well. So that's available to us at BDO now. That all exists. All our staff, all our partners, the key partners who work in the not-for-profit sector have access to it. So if you are a BDO client, please speak to your relevant partner that you engage with, or reach out to me in relation to some of this stuff and how this could be used for yourself. I've got about 2 or 3 minutes to wrap up, I think, and I'll just wrap up on a couple of things here. So I just want to talk to you about our approach to clients and our work in the data analytics space. If you could just pause there, please, Aletta, thanks. Just very, very quickly, I came into the world of data analytics as an accountant. I'm not a technical coder. I can't code. So we focus a lot on the so what. So what are we going to do with this analysis? It's all about informed decision making. And what we found is that analytics can be broken up into technical and non-technical bits. If you scroll down just once, or press an arrow one more time, please, Aletta, and one more again, please, and one more again. So we'll stop there. We came up with this stack, and what we found is that if you're talking about data analytics, it's a very confusing space and very noisy space quite often. People could be talking about AI, they could be talking about dashboards, or they could be talking about the processing power of your IT environment or something like that. The bit that we focus a lot on, mostly though, is so what. So you find some analysis and you go, okay, what are we going to do with this? So what we found is that there's probably 6 layers of work that needs to happen for good data analytics to be used in an organization. The red stuff is a bit more technical, and the blue stuff is a bit more business oriented in some very simple terms. And where they meet in the middle are the dashboards and the reports. And some of the examples I showed you today. A lot of technical work goes on behind the scenes to make that work, but a lot of business thinking goes into it to decide what I want to see and what decision I'm going to make. So our approach to data analytics has been a combination of all 6. We are a full service firm. We support with all 6 in terms of getting the right data environment set up, getting the right data from your various systems, doing the right calculations and algorithms for that, and then designing the right reports and dashboards for you to make good business decisions off. And as you get more mature, governance of that data becomes really, really important, not just from an accuracy perspective, but also from a privacy law perspective and ethics perspective as well. Those things become really, really important in more recent times. We're seeing a big trend in that as well. If you tap next, please, Aletta. I won't go through this in detail, but we just highlighted some uses of data analytics. And the biggest thing is it's all about informed decision making to help you as managers and financial professionals or any part of the business you operate in to make the right decisions. It can be applied, analytics can be useful for one tiny project of an organization, or it can be an ongoing analytics thing across your whole organization as well. We recommend picking one small thing to start with, do that really well and succeed, realize the benefits, and then expand more broadly. And then the final slide I've got, which I'll wrap up on, is I've been doing a fair bit of work in the aged care sector lately. We worked with the Aged Care Royal Commission a while ago. I think I found yesterday I was presenting for the AICD, and we found recent stats suggesting that only about 46% of providers in the residential aged care sector made a profit in FY21. And that number is getting worse. I think it's about 34% in FY22. So it's a sector that really needs to understand its business drivers really, really well, very quickly. So for them, we kind of came up with this framework, and I think this applies to anybody, to be perfectly honest. 3 focus areas: financial sustainability and growth, workforce and understanding your operations, and then understanding your branding, marketing, and customer experience, so that the people that are you're serving keep coming through the door and you're marketing well. It's really important that all 3 are connected and you understand how all 3 are connected. So what we've done is we've come up with this framework on the right. It starts at the bottom, understanding your strategic priorities, getting the right data for yourself, and we've given 8 areas to focus on, coming up with initiatives to improve each of those 8 areas, coming up with a way to prioritize those initiatives, because you're going to have lots of options, and then working out how to implement them, and then you just rinse and repeat. It's a very high-level framework, but it's been pretty useful for many of our clients as well, so they've been using that as well. So Elizabeth, I think with that I'm bang on time, so I'm going to hand back to you.
Thank you very much, Fahim. That was really insightful, and I have to say I have really enjoyed using the tool, the ACNC data analytics tool that you created, you and your team created. So if anyone does have any questions or would like to potentially use some of the data within that tool that we've created, please reach out to your BDO partner and we can work with you on that. So thank you for him. No questions have come through, therefore we'll move right along to Aletta. Thank you, Aletta.
Thank you very much, Elizabeth. I just wanted to say, and because I'm in control of the slides, I can go back. I just want to say this diagram really, I mean, all of them were really great for him, but this one spoke to me, and I can bring this diagram back to what we've done with BDO Australia's sustainability report, because we did start about 18 months ago or 2 years ago. The BDO board and our chief executive partner, Tony Schiffman, and the office managing partner said one of the strategic priorities at the bottom, right, was sustainability at BDO, sustainability and ESG. So we started with that strategic priority. But then we realized that we needed data. We need baseline data to know what the starting point is. And we've looked at the data around around people, around planet, around governance, around community. So we've looked at all those aspects, and there's so many parts. But now that we've got the data and we've got it in a report, now we can start to think, what are the prioritization of the initiatives for BDO Australia? So it was absolutely a priority for us to get more female representation of the board. So we can say tick as of Monday. We want to increase training hours because the data showed to us although there's a lot of training happening at BDO, maybe in certain service lines there's not enough training, etc. Right? So strategic priority, we collected the data, we prepared the report, now we prioritize next initiatives, and now we implement those initiatives. So this is exactly, Fahim, what we've done at BDO Australia around sustainability. So thank you very much. That was a fascinating presentation.
No problem. I'm glad you enjoyed that. Thank you.
So Elizabeth, I'll come back to accounting standards. So when we look at the accounting standards, I thought the first thing that I should flag is that so many clients have spoken to us about, I would say, their unhappiness or with the new AASB 1058 and AASB 15, as it applies to not-for-profits, that it's still unclear, etc. Now, the good thing is on the 17th of November, earlier this month, the AASB issued 2 invitations to comment as part of a post-implementation review. And there's 2 invitations to comments. The first one, ITC 50, is around the post-implementation review of income of not-for-profits, which address AASB 1058 and AASB 15. So I would really like to encourage our clients, if they've experienced significant difficulties in interpreting, implementing these 2 standards, to speak up. For the AASB, it's really hard, and I used to work at the AASB. It's really hard to deal with concerns or criticism unless you've got very specific examples and fact patterns. So please speak up and contact the AASB. And then the next one, ITC 51, are around consolidations. So AASB 10, AASB 12 around other disclosure of interest in other entities. At AASB 1 to 4, I know that's quite close to the heart of a lot of people, related party disclosures. And also AASB 1058, which are very specific Australian additional disclosures. So this is your opportunity to speak up, 2 invitations to comments, and this is a snippet from the AASB website, so it's quite easy to find. Remember, I've said in this update, we're only going to look at not-for-profit specific issues, and this goes in addition to the webinar that was presented last week, which is a general update on all accounting standards. Now, one of the things we want to flag is non-refundable upfront fees. Now, if you look at non-refundable upfront fees, there's a new standard that's been issued, but it's not yet effective. The standard is AASB 2022 number 3, which is talking about an illustrative example for not-for-profit entities, and it goes with AASB 15. So there's an additional illustrative example 7A on how to apply AASB 15 in the specific fact pattern. Now, although this standard has been issued, it's not yet effective. We recommend that not-for-profits early adopt these amendments because this example merely clarifies how the principles in AASB fee relates to these upfront non-refundable fees. So, you know, the sooner we deal with the clarification and confirm that our initial understanding was correct, the better. So this is a good one to look at. I have made a few extracts from the standards to try and assist. So this example 7A illustrates the requirements of AASB 15 to transactions where a not-for-profit entity charges upfront fees to customers or members as part of goods and services that they offer. So the following are examples of upfront fees that we see in practice. So it could be joining fees at clubs, golf clubs, we see it a lot, and other membership bodies. So it could be a joining fee with CPA or CIANZ or golf club or any sport club. Good examples. Number B, enrollment fees at schools, and that's one that we've talked about a lot with so many clients. Those enrollment fees, how do we account for that? And then any other establishment or setup fees where the fee is paid at or near contract inception, and the customer can review renew the contract each year without paying an additional fee. So once you've joined at the start, you can just renew and renew for the next 30, 50 years without paying that initial fee again. So this is what the focus is of this additional example. Let's look at the example or the fact pattern in this example. So in this example, the additional one, example 7a, an organization, so it's a not-for-profit, an organization offers enrollment to prospective clients for the services it provides. Now, upon accepting an offer of enrollment, the prospective client must pay an upfront fee. Sometimes it's called an acceptance fee, an entry fee, an enrollment fee. So remember, it doesn't matter what we call it, substance over form, it's the nature of the payment. So when we accept the offer, we pay this fee. The enrollment form sets out the following terms and conditions relevant to the fee. Now, I just want to clarify, these terms and conditions are very specific to this example. Therefore, if you want to pick up the principles or the answers in this example to other fact patterns, you have to make sure that these facts are exactly the same. And if they change ever so slightly, your answer could be different. So the first one is, upon payment of the fee, future service is guaranteed for the client to commence in the agreed upon year and on an ongoing basis. So it's a guarantee. So I'm not making a payment and I'm just on a waiting list, right? And I don't know whether I'll receive this service. I pay this fee, this future service, whatever it may be, will commence in a particular year and on an ongoing basis. The second thing, the fee is non-refundable and non-transferable. And the third one, the fee is not offset against any future fees that are charged on an ongoing basis for continued access to the service. So I know sometimes in schools you pay a fee, and then in future, let's say an enrollment fee, it can happen. And then in future, when your child is in prep or year 1, or they join the school in year 7, for example, this fee would reduce that fee that you pay in year 7. So that's not what we're dealing with here. So I just want to articulate that we're dealing with a very narrow and a very specific fact pattern in this example, all right? And often the facts are quite different. So here the example is trying to explain the analysis and the process that has to be followed by a not-for-profit entity to determine the accounting treatment for upfront fees that they've charged. So the process does not specifically discuss any particular fee, and it's applied in the context of the relevant facts and circumstances of this entity's upfront fees. And also the other thing to note is the term customer is used in the analysis to cover all counterparties to an agreement. So it could be members, it could be students. So we know the term customer is quite different and difficult, as Fahim said earlier as well, when we look at not-for-profits. So there's a whole analysis, and the purpose of this example in this accounting standard is to actually illustrate the analysis you have to go through. So there's a lot of explanation of you have to consider A, and these are all the things to think about, and then you have to consider this, and these are all the things to think about. So a very useful example. I'm not stepping through all of that, but I'm getting to the answers for this narrow fact pattern. And that is that the organization would apply AASB 15 very specific paragraphs and conclude that the agreement is within the scope of AASB 15. Remember, our first issue is it within the scope of AASB 15 or AASB 1058? Because we have a customer and there's a contract. It's a written contract, it's enforceable, because you can either go to the entity and they have to perform, or you can use a remedy under Australian law if the organisation did not provide the services that they initially agreed on. And then the organisation says, okay, if we're in AASB 15, we consider the guidance on how to apply or how to deal with a non-refundable fee. in paragraphs B48 to 51, and refer to paragraphs 22 to 30, etc. And the organization here concludes that the non-refundable upfront fee does not relate to an activity that represents a separate performance obligation. So there's not a separate service we're providing here, and therefore the fee is included in the consideration for the performance obligations in the agreement to provide future services. So we're not doing anything special upfront when we receive this money. The only thing the organization will do is we will provide services, let's say, over the next 30 years. And this payment is just to give us those access to those future services. The upfront fee is therefore treated as an advance payment for future services and is actually only recognized as revenue over the period of those future ongoing services. So we do not recognize the revenue on day one. We recognize it as the future services are provided over many years. This is an incredibly important example. And again, it's the process that's important. And I would imagine if you receive these fees to put a position paper together, you would look at the process outlined in this example. So that's the first one. We've also included here an article where we talk about it. It was in our May edition of Corporate Reporting Insights. The next thing I want to talk about is ACNC guidance, which is guidance on disclosing key management personnel remuneration and related party information. Now, this again is really important. It happens kind of at the same time as we've got the new AASB 1060 replacing the old RDR disclosures. Because in the new AASB 1060, there's a specific section talking about related party disclosures if you're applying AASB 1060. We also know something else happened, and that is AASB 124, the related party disclosure standard, is now a mandatory standard for entities preparing special purpose financial statements. So it doesn't matter whether you do special purpose financials or general purpose financials, related party disclosures is important and it's required. So if you're doing special purpose and you're a not-for-profit, you still have to apply AASB 124. If you do general purpose and you are tier 2, so you apply AASB 1060, it's there again. So you cannot get away from it. That's message number one. So from our 2022 annual information statements onwards, so if you do your 31 December annual information statement, these KMP compensation disclosures are required. Only for large charities with two or more KMPs, and the disclosures are only in aggregate. So that's a good thing. So it's not individual KMP, but in aggregate, and you can see it's being phased in. So for 2022, large charities, two or more KMPs. And the reason for that is if it's only one KMP, clearly we're not providing aggregate information. It's very clear to link it back, or easy to link it back to one KMP. From 2023 onwards, annual information statements, we're only looking at KMP disclosures for medium and large charities. So important that it's a phasing in, so kind of transitional requirements. The ACNC has issued a number of publications or regulations around this guidance. So there's KMP remuneration guidance, and they provide examples of who are KMP. So responsible people, the board, committee members, trustees, and then also senior staff. So CEO, CFO, COO are examples of people who could be KMP. No hard and fast rules. These are examples, people to think about. And then they also say KMP services may be provided by a separate management entity. Or it could be that an accounting firm provides a CFO in return for a fee. Now, in that situation, that would also be KMP compensation. Then some additional things to maybe just point out. If the not-for-profit entity is preparing special purpose financials and they're complying with AASB 1 to 4, or if they do general purpose financials tier 1 and they comply with AASB 1 to 4, paragraph 17 requires disclosure of total KMP compensation. So it's not per person, it's total. Plus they want a breakdown for each of the following categories. So short-term benefits, post-employment benefits, other long-term benefits, termination benefits, and share-based payments. And then the ACNC Commissioner has exercised its discretion that charities are not required to disclose the total for each category above, but only the aggregate. So although the standard would like a breakdown, the ACNC Commissioner said only an aggregate, but this discretion of the ACNC Commissioner applies on an ongoing basis. So it's not just for the first year. So on an ongoing basis, it's in aggregate and not per category. So that's important to note for not-for-profits. The other thing is that AASB 101, paragraph 38 requires disclosures of comparatives. It's a general requirement. The ACNC Commissioner has exercised discretion that charities are not required to disclose comparative KMP compensation when they apply these related party disclosures for the first time in the 2022 annual information statement. Please note that this discretion only applies for 2022. The other thing is important. If a charity becomes large in future, there's no exemption from disclosing KMP compensation in the comparative year when they first disclose this KMP disclosures for that first time. So this is a once-off for 2022, absolute once-off. And then we also have that the ACNC Commissioner has also exercised discretion that charities are not required to disclose comparative information when applying AASB 1 to 4 for the first time in the 2023 annual information statement for related party disclosures. Again, this discretion only applies to 2023. So I think it's really important when you look at these new regulations is to figure out what exactly is the requirement for your not-for-profit. The starting point is the accounting standard requires certain things, but then the ACNC Commissioner provides certain relief. Sometimes that relief is only for 2022. Sometimes that relief is only for 2023. Sometimes it's for an ongoing basis. So very important to have a look at that. And again, we've written a number of articles where we try and explain all of that to try and make it easy. The other question that one could ask is the ACNC asks, so who is a related party? I mean, there's a lot of talk about related parties and exactly who is a related party. We have to make all these disclosures. So there's an explanation of key management personnel, and we've touched on this. Consider senior staff, CEO, CFO, etc. Consider whether other entities are providing services which are similar, and therefore we should pick that up as well. And then there's information around related parties. In particular, who would be related parties for small charities on the left-hand side, but also who could be a related party for a medium or a large charity. So, for example, if you look at small charities, a charity's responsible people and their close family members, a charity's senior management and their close family members, and other people or organizations that can influence a charity's decision-making. So very specific rules for small charities. And then if you look at medium and large charities, slightly different. So we're looking at a person that is connected to the charity, such as a responsible person, close family member that has control or joint control of the charity. So you can see the definition and the description for medium and large charities somewhat different to that for small charities. So again, important to have a look at that. And again, if we look at our newsletter, we've got a newsletter explaining who is a related party. Another thing coming from the ACNC is increased reporting thresholds for charities. So we've discussed it last month, so a bit of an overview. Who will be a large charity in future? More than 3 million would need an audit, a medium a charity, and also a small charity, so new thresholds, and I've got a link to the information for you. When we did our update in June, we discussed this, and therefore I've only included this for information. And that is that when we look at these new size thresholds, on the previous slide, you can see it's all about revenue, and it's revenue thresholds. And therefore the question did come up, when do we have revenue for not-for-profit? Some people initially thought if you recognize revenue in terms of AASB 15, then it's revenue, and you consider that for size threshold. And if it's income from AASB 1058, then you exclude that because you've applied AASB 1058. In the end, the ACNC actually clarified. They've issued some guidance on how do you determine revenue, and it's not linked to the standard. A revenue is linked to what are the ordinary activities that generate revenue for this not-for-profit. So if a not-for-profit ordinarily get revenue through donations or bequests, then all donations and bequests, doesn't matter which standard you use to recognize it, the timing, that would form part of your revenue threshold test. If you normally get revenue by earning interest on investments, again, that would be part of revenue for that not-for-profit. So really important to ask, how does this entity, this not-for-profit, ordinarily generate revenue? And you will remember last time, we've included a number of examples on how to assess. So I've got a few examples explaining the activities of not-for-profit entities to know whether the money we receive is revenue and therefore part of the threshold or not. It's important to get it right because it can have an impact on your threshold and whether you're small, medium, or large, and therefore consequences on what you have to disclose. I've mentioned this in June as well, but I want to flag it again, and that's peppercorn leases for private sector not-for-profit lessees, only private sector. We don't know about public sector yet, but we know that the AASB have made the decision that the temporary exemption that was provided to private sector not-for-profit lessees to account for right-of-use assets at cost and not at fair value will be retained. So for our not-for-profit private sector entities, they said it will stay forever, that you've got an accounting policy choice to either account for that right-of-use asset at cost, which is if it's a peppercorn lease as close, more or less $1 or $0. And the other option is to fair value your right-of-use asset, on day one. But that accounting policy choice is staying. This is the best news ever because, we know not-for-profits said it's an expensive exercise to determine the fair value. And then also, when do we recognize the revenue? And if we've got this fair value on day one, now it has to be depreciated over the lease term. And it plays havoc with financial statements of not-for-profit entities. So that's fantastic. For public sector not-for-profit entities, the AASB have not made a decision yet, and they've deferred that decision to coincide with the decisions and the ongoing project at the AASB Fair Value Project. So that's the good news. And we've got a number of articles to look at that and explain it a bit further. The next one is incredibly important, and that is a proposal to simplify accounting. can you believe it, not simplify disclosures, but to simplify accounting for Tier 3 not-for-profit entities. So there's a discussion paper out. This is the snippet of the discussion paper issued by the Australian Accounting Standards Board, where they are trying to develop simplified accounting requirements for Tier 3 not-for-profit private sector entities, so only private sector entities. And this is an extract again from that discussion paper, which I thought was really fascinating. And I was part of this project advisory panel. We met very regularly over many, many months to come up with this discussion paper. Next steps will be an ED and then it's standard. But this diagram is fascinating because it's trying to illustrate how does this Tier 3 for not-for-profits interact with the current reporting entity concept that we have for not-for-profits, as well as the AASB's desire to get rid of the reporting entity concept for not-for-profits. They've already done it for for-profits, but they want to get rid of reporting entity concept for not-for-profits. And they want to get rid of special purpose financial statements. They want to replace it with something else, and this is what it is. So really what they're saying is there's an overlay of the current AC&C requirements on the left-hand side. So your large charity revenue more than 3 million, a medium charity between $500,000 and 3 million, a small charity less than $500,000. In the middle column, you've got the current AASB requirements. So your large charity, your medium charity, your next decision is that charity a reporting entity? And if it is, they do general purpose financial statements, usually Tier 2, but they could also do Tier 1 if they want to. If they're not a reporting entity, currently they can do special purpose financial statements. They can opt to do general purpose, but if they're not a reporting entity, currently they can do special purpose. So your large and medium charities have to consider whether they're a reporting entity or not, and that will give them the answer whether they do special purpose or general purpose. A small charity, obviously, they're not required to prepare financials, but they can if they want to. On the far right-hand side, the proposed requirements. If you're a large or a medium charity, you will no longer look at reporting entity concept. You will go and look at, there's a general purpose Tier 1, general purpose Tier 2, and a general purpose Tier 3. So all medium and large charities will prepare general purpose financial statements. No more special purpose financial statements for medium or large charities. However, there's a Tier 1 for full IFRS. There's a Tier 2, which are just the simplified disclosures. You still do all the recognition and measurement, but the new one is Tier 3, the game changer, and that is simplified accounting. So not just simplified disclosures, but simplified accounting. So there's still a lot of debate, you know, when will you be forced into Tier 1, Tier 2, or Tier 3? Because it doesn't line up with large or medium directly. But, you know, when will you be Tier 1? When will you be Tier 2? When will you be Tier 3? And then, you know, Tier 3 is the debate at the moment. What exactly would simplified accounting look like? How do we make accounting easier? You know, so some of the things talking about at the moment, there will be a P&L and other statement of P&L and other comprehensive income. There will be a statement of financial position, a statement of cash flow that will just be prepared based on the direct method, and no need to separate investing and financing cash flow. So you can just put it together. And then, you know, not sure about a statement of changes in equity, potentially no need to include that. So quite simplified accounting. Then also around fair value, you know, usually you have to use AASB 13 to come up with fair value measurements, but now for unlisted share investments, cost can be used as an approximation of fair value when there is sufficient recent information to measure fair value. And obviously recent is in italics, so what would constitute recent information? And then, you know, there's a lot of requirements in this discussion discussion paper to simplify accounting for consolidation, impairment, leases, employee benefits, etc. This is an interesting read. If you are thinking you would potentially be in tier 3 and qualify for simplified accounting, and again, you've got an opportunity to provide feedback and comments to the AASB. We've included a number of articles for you to consider. Now, last time we talked about portable long service leave in the community services sector, and we've discussed it in June, so I'm not going to step through all of it. It's just a reminder. You know, if you have portable long service leave, just be careful and assess whether you need a liability or not. You know, it depends on the scheme. The warning is you can't assume that your employer obligation is always zero. It depends on the terms of the scheme. So the question is, who has the legal responsibility to settle the claim? Is it the employer with recovery from the scheme, or is it the scheme? And that will impact whether you need a long service leave provision. And we've got a few articles on that one. And then the last one is just a reminder around director ID requirements. You know, today is the last date for application. So please make sure that your directors have done this. And this is for for-profits and it's for not-for-profits. A director of any entity, very important to get this right. And again, we've got a number of articles looking at the requirements. Elizabeth, at this stage, I've gone as fast as I can, and I think I've managed to leave 12 minutes for Steph. So she's got some time. She's been patiently waiting. So over to you guys.
Thank you very much, Aletta. Now, I know, Steph, you do have a bit to cover, so I will let you get straight into it. Thank you very much.
Thank you, Elizabeth, and it's been a great session so far. I've got around 12 minutes, so we'll see if we can go through everything in the last few minutes without going over time. Elizabeth did do a bit of an intro at the beginning of the session, but just as a recap, so I'm Stefanie Merlino, a partner in BDO's People Advisory Practice in Melbourne. I advise clients around their employment tax obligations, so FBT, superannuation, payroll tax. I know a lot of NFPs are payroll tax exempt. I also work in the work cover space, and we do a lot in the pay compliance space. So I'll be spending the next little while providing an overview on some topical areas in the employment tax space, specifically around the classification of contractor versus employee and what this means from a tax perspective. And this is a very topical area at the moment, and you'll see why. And this will be followed by some discussion on volunteers, FBT, and wage compliance. So contracting, there are many benefits to entering into contracting arrangements, both for the organisation and for the contractor. This includes greater flexibility for both parties, increased earnings potential for the contractor, and the ability to have specialist experience for the organisation. However, whilst the intention may be to engage a contractor, this does not mean that tax and other obligations do not arise. In addition, it is the underlying arrangement that should be assessed at the outset to ensure that the relationship between the parties is one of principal and independent contractor and not one of employment. Until recently, a contractor versus employee assessment involved an assessment of the totality of the relationship, and this included consideration of various common law factors, such as the degree of control, who bears the risk, and who is providing tools and equipment. However, this all changed earlier this year following two landmark High Court decisions that were handed down on the same day, 9th of February of this year. And you'll see I've got the two cases set out on the slide. It was personnel contracting and DAMSEC as the second case. These two High Court judgments shifted the focus from the totality of the relationship to the written contract and the documented terms that set out the rights and obligations of each party. So it's vital off the back of these two decisions that all arrangements entered into between the parties are contained within the written contract, as arrangements that are partly written, partly oral, or where there is any inconsistency between what happens in practice compared to what's actually documented in the contract, can be very problematic and creates a level of uncertainty around what that relationship between the parties should be. The ATO has issued a decision impact statement following the personnel contracting case. That was the first decision that was handed down on the 9th of Feb. And the ATO is also reviewing a number of rulings which provide guidance on the meaning of the term employee. And if you have a look at the ATO website, you'll also see that it currently states the expected completion of this guidance is November 2022. Given we're the 30th of November today, last day of November, we haven't yet seen this guidance, but we're expecting more insight into the ATO's approach on these matters imminently. So it's absolutely a watch this space area at the moment. In the meantime, we do encourage employers to revisit their template subcontractor agreements to ensure they are sufficiently detailed and contain all appropriate terms and clauses. And this also, another thing to consider is the extended definition of an employee for employment tax purposes. And you'll see that last point on the slide, I've set out an example of the extended definition of an employee for superannuation purposes. Now, if we move on to the next slide and volunteers, I wanted to just spend a minute or two covering off on volunteering arrangements, as I understand a lot of not-for-profits may enter into these types of arrangements. Typically, there are no contractual arrangements in place and nothing documented. And where that's the case, it should be a genuine contractor and the individual would not be considered an independent contractor. So a genuine volunteer, and the individual would not be considered an independent contractor or an employee. While many volunteers do volunteer their time out of their own generosity without any return payment, it is not uncommon for a volunteer to be paid an honorarium or to be reimbursed or paid an allowance so that they're not out of pocket for any specific costs. And there are specific rules in place that apply to the tax treatment of these payments. Whether such amounts are considered assessable income does depend on a number of factors, and that includes the nature of the payment and the volunteer's circumstances. So as an example, if a volunteer receives an allowance with no regard to actual expenses and there's no requirement to repay any unspent amounts, then the allowance is likely to be assessable income. And then that last point on the slide, just around benefits and FBT obligations. Typically, where a benefit's provided to a volunteer, they shouldn't attract FBT obligations. But I will just note that the FBT regime does define the term employee, and the link between employee and FBT is basically a current employee is someone who receives salary or wages from which a pay-as-you-go withholding obligation exists. So if there's a pay-as-you-go withholding obligation for payments made to a volunteer, then any non-cash benefits will require FBT consideration as well. And if we move on to the next slide, I wanted to cover off on some FBT considerations for not-for-profits. There are a number of FBT concessions, exemptions and rebates that are applicable to certain not-for-profits, including PBIs, health promotion charities, public and not-for-profit hospitals and public ambulance services. And there are applicable capping thresholds that are available depending on the type of organisation. So you'll see I've got 30K grossed up or 17K grossed up are the caps where you've got where you qualify for FBT exemption. It is important to note certain organisations do require endorsement by the ATO to access the FBT exemption, and this requires that the not-for-profit is registered with the ACNC as a charity. Now, I've mentioned the capping thresholds there, 30,000 and 17,000 is grossed up. So employers must ensure that employees are packaging the right combination of type 1 and type 2 benefits so that the cap is not exceeded. Otherwise, that's where you will get into a territory where you've got a FBT liability. So a type 1 benefit is a benefit that attracts GST. Therefore, there's a higher gross up rate that is applied to reflect the corresponding input tax credit that the employer would be entitled to. An example of that for salary packaging arrangements could be certain utilities bills that attract GST. A type 2 benefit does not attract GST, so the lower gross up rate is applied. And an example of that, which we commonly see packaged by employees of not-for-profit employer entities, is mortgage repayments. If you're rebatable, you're entitled to a 47% FBT rebate of the gross FBT payable up to the grossed up $30,000 cap per employee per FBT years. And benefits in excess of the cap are not eligible for a rebate. Now, in addition to the FBT exemption and rebate caps that I've got set out on the slide, there is a separate grossed up cap of $5,000 that applies per employee per FBT year, and that's for salary packaged meal entertainment and entertainment facility leasing expenses. This cap was introduced from 1 April 2016. Prior to this time, salary packaged meal entertainment and entertainment, FLE is the abbreviation, was uncapped. So employees back then would be able to package endless amounts of meal entertainment, restaurant bills, etc., without there being an FBT liability. So that's been scaled back. And then moving on to the next slide with just some other FBT considerations for not-for-profit entities. First point around tax-exempt body entertainment. So that's applicable for employer entities that are income tax exempt. So meal entertainment and recreational entertainment is considered tax-exempt body entertainment for income tax-exempt employers. The two valuation methods are the 50-50 method and the actual per head method. The key point there, if you are applying the actual method to value your tax-exempt body entertainment, you have very limited application of the minor benefits exemption. So that's where a comparison between those two valuation methods is really important. And then just a car parking and car parking expense payment fringe benefit exemption. There's a specific exemption in the FBT legislation that's available for certain charities that are registered with the ACNC. That includes scientific institutions and public educational institutions. So where you have car parking fringe benefits that would otherwise attract FBT and you fit within the specific criteria, then those benefits do not attract FBT. So I just wanted to set out on the slide some key takeaways where you are a not-for-profit, because the FBT regime does have some very unique concessions available for you, and absolutely it does provide some benefits for employees. So salary packaging opportunities where you can take advantage of those concessions. What that gives is attractive. It provides the ability to attract and retain staff and helps not-for-profits compete against for-profit employers. Some other points on the slide, endorsement obligations, just be aware that those exemptions are available where you meet certain conditions, and some organisations, as I said earlier, need to be endorsed. So that's really important. Otherwise, what would be a very concessional way of providing benefits to an employee will become very costly because you will no longer qualify for those exemptions if you're not endorsed, and there is a requirement to do so. The third point around salary packaging providers, I know from my conversations with a lot of not-for-profits, it can be a very administratively burdensome process to offer salary packaging to employees. This is where there is the ability to outsource that to a salary packaging provider, so they deal with all of the admin and manage that process on your behalf. It does require, though, an effective salary sacrifice arrangement to be entered into, and very often that's the employer's obligation to ensure those agreements are appropriately documented. So just be conscious of that where you are offering salary packaging to employees, it's prudent that you have the correct agreements in place, and it's considered effective and not an ineffective salary sacrifice arrangement. Capping thresholds is really important, depending on what type of exemptions or rebates you're entitled to. There are the caps that I mentioned earlier, so important that you don't exceed those caps, otherwise there will be an FBT liability for the organisation. And reporting obligations, so even though the not-for-profit employers qualify for these concessions and FBT exemptions, there are still going to be reporting obligations. You'll need to disclose certain benefits on employees' payment summary as a reportable fringe benefit amount. So the employee won't pay tax on that amount, but it will be taken into account for means testing purposes. Now, I know we are slightly over time, so I'll just spend the last couple of minutes just covering off on some wage compliance comments. This is an area that we're seeing a lot of scrutiny being placed by regulators, absolutely an area of focus, wanting to ensure that employers are paying their employees correctly. And it's great to see, I know we're seeing a lot of employers taking proactive steps to ensure they're calculating the right entitlements and paying their employees correctly. I've set out on the slide some of the areas where we do see employers and not-for-profits encountering some challenges with complying in this space. And I'll just call out some of those. It's rostering can be problematic, time and attendance, recording, and whether that's a manual system or an automated system, and also your payroll configuration and how each of your pay codes in your payroll system are flagged for tax and superannuation purposes, as it might be that there's a shortfall there just purely due to an incorrect configuration of certain pay codes. So yes, I think go through that list and just think about where you sit in terms of complying with each of those areas. And then moving on to the next slide, the SHADS award is the award that we expect a lot of not-for-profits would be covered by, and we just wanted to call this out because there are a number of complexities in the award, and I've set some of those out on the slide. And then to wrap up on the last slide, risk management steps around wage compliance. So that first point, periodic pay compliance, and just noting our directors asking about this. Directors can be personally liable for underpaying employees, their pay and other entitlements. Hence, pay and wage compliance is absolutely something that should be getting attention by directors. It isn't just a payroll function, or it shouldn't just be shouldn't just be the payroll team that's concerned about pay compliance. It should be the directors and the whole organisation, because it is so important, and there are those liability risks where there is non-compliance. And then what about your current processes? Have systems been set up properly, and what about your technology? Regular sample testing and independent checks of pay compliance are a must, and will ensure that employees are following time recording processes correctly, and that payroll teams are checking annual salaries against the hours that staff members have actually worked. And then the last comment on the slide is around employment law considerations. Given the complexities with the SHADS award and any other awards that may be applicable to your particular industry, we recommend developing a thorough understanding of those industrial instruments. There are complicated rules around roster patterns, rates for grades of employees, full-time versus part-time, and a whole host of other complexities. And as a result, we strongly recommend that organisations seek support from professionals, including employment lawyers in some case where you need some support around award interpretation, to ensure that you're aware of your obligations and you are complying. So that wraps up my high-level summary of wage compliance. And thank you very much, Elizabeth. I'll hand over to you.
Thank you, Stephanie. That was very insightful. And I guess if anything has resonated with you today, or you have any further questions, please reach out to your BDO contact, and we would be happy to assist. In addition, we have a large team in our BDO's IFRS and corporate reporting team. So on the screen right now are all the leaders of our IFRS and corporate reporting team. Aletta, you should all know quite well from all the webinars she delivers, along with a number of her team members. So we welcome you to reach out to any of us, and this is the extent of her team. So we are always